Hi, everybody. Still late. 1 hour late beyond my planned start. But good morning, good afternoon, good evening, wherever you are. Have some good curves today, some good charts. Kind of going back to the master thesis, stuff that Jeffrey West talks about, super exponential growth versus exponential growth versus what Bitcoin is doing. It's growing according to power, which means it's growing proportionately. Proportionately is the key word, proportionally with itself. So really quickly, let's revisit. I got some new charts as well for these little setups, but this is all about trying to understand our purchasing power, right? Understanding how much is a dollar worth or a Norwegian kroner, Swiss franc. Going to be running these now. I think in this format, it's a really good format for long term. This is gold price. Obviously, when gold is pegged to the dollar or pegged to the British pound sterling or the Swiss franc, you have more stable prices, that's for sure. So you can just see it here. There's nothing really happening except for the Civil War in the United States. Devaluation of the dollar here with Roosevelt, and then the Nixon shock takes gold to the free market prices that we're at today. $3,300 as of June close. All right, so we do the 19th century trend. It's very simply nothing really happening there, 0.1% CAGR. Take it to the founding of the Federal Reserve, which is a new monetary epoch in United States history, which also includes this devaluation in the 1930s. You get this trend, which is in itself kind of arbitrary because we're still in a fixed dollar, even though Americans couldn't own it at the time, a fixed gold dollar. From the Nixon shock, all right, I just pick it up from August 1971. Although really, as I've said, things started to go haywire in the late 1960s with de Gaulle claiming the gold. But you know, you could pick it. You could pick the dates wherever these starting dates. I did August 1971 right here. Let's just put that trend on. It's right there. It's actually higher when you run all the math because of everything that happened in the 80s. So the trend line is here all the way up until 2008. Right? Then I stopped calculating this. 2008 trend is here. All right? And I think looking back in history now, 2008 is a new monetary epoch because reserves basically don't mean anything. It's the world of quantitative easing, quantitative tightening, as they like to call it, but most of the time they're easing. So this is a pretty clear view of Jeffrey West's super exponential growth. Every epoch, every change, also with technology, is true. It's not only about purchasing power, but at least in the context of gold, which is supposed to hedge against purchasing power, every new era, we get a little bit faster and faster growth. But these CAGRs are still nothing to write home about, right? I mean, you wouldn't want to, in my opinion, gold has failed as a store of value because we can see that even from 2008, the trend itself is only 4.4% per year. Now we are pushing up quite high. Every month that this closes, we're going to pull this red line higher. Okay, just like the Bitcoin power curve. This is an exponential curve, but we're going to pull it higher. Still, I'm a big believer in the long-term trend of things. So, hold gold if you want, but it's generally hasn't been that outstanding of a store of value unless you've really caught it at the very key moments, which would be here and then here at the bear in 2000. The very, when Gordon Brown sells the Brits gold, it's when you should be buying. Then you'd get some faster trends, but overall, according to monetary epochs, nothing to write home about. All right. Someone asked about silver yesterday. Here's silver over the last 200 years. Silver actually went down, which is kind of interesting, right? So gold standard internationally and in the United States started here in the 1870s. William Jennings Bryan was a big silver bug against the gold interests. Gave this Cross of Gold speech, which The Wizard of Oz was based on. Didn't do much for silver. Silver, from a market standpoint, actually went down. All right. And remember, I take this trend all the way till the founding of the Fed. So, till about here. Went down. Went down even further. Till basically World War II was over. Let's go from the 1914 trend. All right, so actually it's catching some of these down days, down years of silver. Remember, silver, unlike gold, was allowed to be held by Americans and during the 50s and 60s. Even to this day, they have what's called junk silver. Pre-1966 treasury coins actually have silver in them, and people collect them and melt them down or sell them. So from the founding of the Fed until, again, the Nixon shock, this is the trend. All right, so it's positive CAGR at least, but it's not that good, 1.8%. But again, we're in an era of still more stable prices here, even though there, of course, are major depressions, certainly not helped by the government. 1971 trend for silver, all right, which again, kind of an arbitrary start date, but it's starting in August 1971. Silver's up, but if you run it from 1971 until 2008, only 1.3% CAGR. Again, had a big spike. Hunt Brothers in 1980 tried to corner the gold market, the silver market. Failed spectacularly, went bankrupt. Silver goes into a 20-year bear just like gold. All right, and then this 2008 trend, which starts, again, August 2008 is when I'm starting it. 1.3% CAGR. Actually, almost identical to the 1971 trend. So, both of these trends, notice, are slower than the 1914 to 1971 trend, the black line. So yeah, silver has been hyped a lot over the years, but brass tacks long term hasn't been a great inflation hedge. A lot of newsletters have been sold over silver. These are the brass tacks return rates. And keep in mind, when, if you catch, of course, if you catch the boom, you can make huge money, especially for the time, right? This gets a lot of people excited when silver's $1 when the gold standard ends, and then it finishes at $50, $42 on the month. I think it hit $50 on the day. I'm not quite sure. Close to 50 on the day in the early 1980s. But on the month, $42. We didn't see that again until 2011, where we hit 50 for sure, intraday. But we're lower than that now, still, the 2011 price. So silver, just like gold was a couple years ago, remaining stagnant. Not that exciting, and interestingly, not that great of a hedge. Okay. So stocks remain the best indicator of this sort of catching technological trends, protecting from inflation. Over the long term, it has been stocks. Okay, so A revised S&P all the way back to the 1800s. Pretty slow growth, 2% per year until the founding of the Fed. From the founding of the Fed until 1971, 4.8% per year. You know, beautiful treadmills increasing here from 1971 until 2008. All right, I stopped calculating this trend line from 2008. August. 9.6% CAGR. And then after 2008, we actually start from a lower base, but we are moving faster. Although it's going to take a while to actually catch the 1971 trend if things hold. 11.5% CAGR. I revised these slightly from yesterday for what I'm about to show you, the Federal Reserve's balance sheet. I was doing this at the end of 2008. It does make a difference. It was closer to 12% CAGR, but if I catch this downtrend a little bit and, you know, just start it basically when, you know, a fixed date when the crisis started, it was August, September 2008, end of August 2008, that's the trend. But you do see this very clear treadmill where we're running and we have to jump to faster growth to keep surviving, basically. If we don't do that, the system is unsustainable. It will collapse. But at least stocks are a better store of value than gold or silver have proven to be. And I just want to say again, I'm not defending the current system, but you just have to parse through it a little bit because, yeah, we could say that prices undoubtedly were more stable in the 1800s when gold was fixed to the dollar or to the sterling or to the Swiss franc. All countries were on a gold standard from the 1870s. Very short-lived international gold standard, basically from the 1870s until the start of World War I. But of course, the technological growth that we've seen, you know, in the last 10, 20, 30 years has far outpaced the inflation. So you got to judge those things. But again, I'm not saying, you know, I still remember the protests in New York after the global financial crisis, and the Fed was trying to say there was no inflation, price inflation. And this Fed governor, I can't remember who it was, but it was like literally their protest. The Fed governor was speaking and said, well, you have to look at the whole picture, the basket of prices. You know, technology's going down. The prices of iPads are going down. And this was back in, you know, 2011, 12. And then one of the protesters said, it was quoted in the news, it was quite a famous piece, you can look it up. It just said, I can't eat an iPad. So I'm sympathetic to those arguments for sure. It's another reason why I don't buy the CPI indices. Let's just look at corporeal, real things like the gold price, the silver price, or the S&P 500. You can get a better clue of where we need to be or where you need to be, you know, to protect your family. I would say you need to at least get 11.5% per year because that's what the S&P is doing since 2008. All right. The days of, you know, and this is without dividends, by the way. If you reinvested those dividends, you'd do even better, about 2% better. But the days of, you know, 5% returns is just over. You got to do better than that. Let's look at the Federal Reserve's balance sheet now. I think it's here. Yeah. All right. So unlike these, which I pulled back to the 1800s because they're long scale charts, the Fed opened its doors in 1914. I got balance sheet data from November of 1914. That's why I've used that date for the others as well. All right. I started this literally, the new trend in November 1914. That's when the Fed balance sheet data is recorded. So let's look at it. You know, interestingly, until the U.S. entered World War I, they had very low numbers. Right, this is the hundreds of millions. The U.S. enters World War I, we get into the billions of their balance sheet. World War II, we get into tens of billions. See, World War I, World War II, GFC, global financial crisis. And then, of course, the word that I can't say because I would get censored. I say it all the time, doesn't really matter. The pandemic. Take away some views now. We can see the big bumps over time. But if you want to, again, try to understand what the Fed is getting as a return on its balance sheet, which, of course, is just a free return. They can print as much money as they like. We got three trends. Okay, so the first one is the 1914 trend, right, which takes a while to sort itself out. Obviously, right here, the trend was not this high in World War I times. But once you let everything shake out, this is the 1914 to 1971 trend line. Okay. Now, interestingly, the Fed is different here than the other assets. It's a little bit more like the American debt structure, which I haven't shown yet. But so until 1971, we're here. But then when the Great Moderation starts, okay, so this is the 1971 trend line, starting at right at August 1971 when the Nixon shock starts. I've noticed this with different charts I've made, and this really speaks volumes, I think, to literally everybody in our financial world that is a talking head today on CNBC or Bloomberg. These are people that cut their teeth in a very stable environment where they thought they were like scientific. Okay, so let's take away they actually settled it down. They didn't print as much as the Federal Reserve likes to refer to this period as practice during the Great Depression. They were just practicing. But, again, this black line is from 1914 until the blue line starts. I'm extending it out so you can see how the slope looks and how the projections look, but there is no data feeding into the black line from August 1971. Okay. With that in mind, notice how we've gotten back to that today. It's kind of interesting. So that's one thing. But notice how unbelievably stable this blue line is, the Federal Reserve's balance sheet. It's when Alan Greenspan was in power. The maestro, as the New York Times called him. It's 100% R squared. It's rounding to 100%. It's not literally 100%, but you can't do much better than this. They picked a number and they just increased their balance sheet, i.e. they printed money and bought bonds. That's what's really happening. It's total assets of their books. For 50 years, 40 years until the GFC. 50 years, basically. No, sorry, 40. 1970 to 2010, roughly. 38 years. 6.7% per year. So this is a really important point. I think it's when people. Good evening, Tim. Yeah, that's a good point. It's a great point, actually. I wish I had the capabilities in my current software, but I don't, and I'm going to need to think about it. He wanted the dotted line to be dashed after 1971, which makes perfect sense. I've thought about it, but I can't do it with my current software. I'm sure I can figure out a way, but I'd have to do a separate setting, so we have the trend and then the projected trend, and then I could change the solid to dotted, but whatever. That's a good call. I'll try. So, but notice we are, again, this is an interesting point, right? Once we do the QEs of the 2010s and the silly season of money printing during the 2020s, we're actually back on the all-time trend, or the 1914 trend until 1971. Again, very interesting. But I really can't stress this enough. Like in the classrooms, in the textbooks, This is still during the Soviet Union. The idiot Paul Samuelson was writing that the Soviet Union was about to overtake the United States, like every fucking revision of his book, which was so stupid. But I think, Milton Friedman was even being big here, and he was sympathetic to trying to understand how the Federal Reserve could manage money supply. It wasn't that complicated. You show up in the Federal Reserve, you increase the balance sheet 6.7% per year, and you go home. Even here, which there were crazy libertarians that were, Gary North, the racist Nazi, he's dead now, but he buried a tractor during this time. Everybody thought Y2K was going to destroy the world. Right? We're always apocalyptic. It's a very common theme among humans. Look how small of a blip that is compared to everything else. So this is actually the best chart visually to show how complacent the issuers of the United States dollar became, and how they thought that they could run the money supply like an experiment, or like just some fixed issuance per year. There are more factors that went into why they chose to do this once the GFC started. All right, but you can clearly see that nothing here has anything to do with predicting the GFC, so there's other things to look at. One of them, for sure, is the moral hazard that everybody in the United States banking system felt would occur would a problem arise. And that moral hazard was vindicated by Ben Bernanke by just bailing out trillions of dollars of worthless mortgage-backed securities. Yeah, it's not, Tim. So you see it we're even really on this trend from the 60s. And I'll need to show the old long-term central bank versus government debt, right? Remember that one? That's also one of my staple charts. And it is true that as a percentage of the government debt, the Federal Reserve was rising, all right, in their purchases. Okay, so I'm going to show you this to answer your question about Vietnam. Okay, so here's the total debt of the United States. Here's when the Federal Reserve comes in. What's the percentage that they typically own of treasuries? Right. Well, during the Vietnam War, that's in green. Let me take off the holdings now, but this is basically the same thing. This is specifically treasuries, not total assets, but you can see it's almost the same trajectory. The holdings of the Central Bank of the United States federal debt did rise during the 70s as a percentage of the total debt issued. So total debt, was $500 billion in 1975. Fed balance sheet in 1975 was growing constantly, but it just turned out that, and this is a lot of the pressures of gold. The United States was not actually issuing, the light green here, this thing, was not growing as fast as the Federal Reserve's balance sheet. So the net effect is the Federal Reserve did do a lot in the Vietnam War, and this Vietnam War ended precisely here. It's interesting when this number tops actually to the month, April 1975, 18.1%. But I think, it's a combination of factors. The Vietnam War ended, and then also the United States had this, all of a sudden people actually still wanted our treasury bonds. We had the petrodollar, deals with the Saudis were being made at the same time. Oil was being priced in dollars. So the Federal Reserve was continuing on basically with the same money printing, but now the Treasury was issuing more debt. So the Treasury was issuing more debt, and the Federal Reserve actually becomes a less share of the pie of investors in the United States debt. So that's kind of how they got out of it, at least my reading of the numbers. But notice that the Federal Reserve didn't do anything different. They just kept printing at 6.7% per year. So it's actually an unbelievable chart, this, to show. Like, my reading of this is a generation of economists, socialists, technocrats, people that thought they had it figured out. You know, Ben Bernanke said himself at Milton Friedman's birthday party, "Oh, we really screwed it up during the Great Depression. We're never going to do it again, thanks to you." They like to say that the Great Depression was practice for them. You know, big money supply increase before the World War I, and sort of leveled it out, which was precisely during the Great Depression here. They didn't pump it until later, in the later years. I don't think the Federal Reserve is the primary cause of the Great Depression, so it's also, you know, I don't want to. They exacerbated it, but they probably weren't the primary cause. But in any event, they like to say it's practice. So that practice sorted itself out here, and this is precisely the period that was known as the Great Moderation. You know, all these guys, Larry Summers, Milton Friedman himself, the icon, they were all teaching and learning and talking about economics in this period. And obviously that just doesn't work. We see here it doesn't work. So anyway, I thought that was really interesting. 6.7% per year, 100% R squared in the post-Nixon shock until GFC period. And then, here's where we are today. All right, so you have to, again, it's a little bit arbitrary. I picked August because I would catch 1 month of the old balance sheet. Right? So I catch the entire ramp up from under $1 trillion to $2 trillion in like a matter of months, right? So I'm catching that with my data. I'm catching that the red line here. But this is what the new trend looks like. So 9.3%, and it is the fastest. And this actually is a pretty good treadmill as well, except, you know, still not perfect. Nothing's perfect in nature, I guess, right? So the 1914 trend is higher than our Paul Samuelson, Larry Summers, Milton Friedman, everybody who was learning or teaching economics at the time. Blue trend, 1971. But now we're on a faster trend still. So we're increasing that treadmill, the speed, the height, and this is the trend. And as I've said, with the monetary base, and this is why I think, again, I'm not rooting for more gasoline on the fire, but it's probably coming. We're way under trend. Not this trend, but the red trend. We're even under the old trend. We're way under trend right now, the balance sheet. There's no doubt about it that they're going to start printing very soon. So, again, I think this is a helpful way. I hope it's helping you just to look at the history of a lot of these economic indicators and assets. And if the Federal Reserve is on a trend of 9.3% per year, all right, even if they're under it at the moment, I think you got to get 9.3% per year, at least. And probably the best is, as we talked about, the stock market, which is 11.5% per year. All right. It's fast. As fast as it's ever been. Okay. So that's the Fed. Debt, I have the same thing, U.S. federal debt. I'm not going to go through this again. Went through this yesterday. Oddly, debt is cool, relatively cool. Right? For as much as they scream and yell about it, it is growing at the slowest rate in 100 years. It's growing at 7.2% per year. That's the slowest rate since the 1800s. Interesting. Doesn't mean it'll continue to be slow, but it is, at the moment, only 7.2% per year. All right, I got a good one now. I told you guys I would do this, and I'm finally have it. We're going to look at stocks. We're going to look at Apple versus MicroStrategy and look at the power curve. You know, since Bitcoin is power, maybe MicroStrategy is turning power. Reminder, stocks are always exponential, just like all this other stuff. It's a straight line on log scale, okay? So this is the all-time trend of Apple. It's off this trend. I already forgot my compound numbers, but it's you're still pretty fast here. Sorry, let me pull up the numbers just to read to you. You're still pretty fast as a compounding figure. But it's much faster now. Okay, here's the trend now. And I'm just showing you how I evolve it because I can do these bands better. But if you look at this trend out here, this is like a 23% trend line, the solid black line. Okay, so Apple is now on that. It's not on this anymore. It's on this trend line. And if you put these bands, they follow it pretty well. We can see that Apple is trading pretty low historically relative to this trend, presuming this trend holds. Maybe it won't. No idea. Not financial advice. It's actually not that much worse. It's, I'm going to check one thing. Check one thing. It's 21% per year. The long-term Apple trend, 21% is this dotted black line. This is actually 29%. It's unbelievably fast. 29% is the slope of this black line. All right, so assuming this idea, let's look at strategy now. Okay, completely different stock, pumped in Y2K times, crashed. People said Saylor was going bankrupt. He didn't, actually, to his credit. Kept his company going. The slope of this trend, the long-term exponential trend for strategy, is, I need to get this on the chart. Sorry, I'm always thinking of different things, but 8.9% per year. Right? So if you buy or sell somewhere around this dotted line, 8.9% per year. Now, they started buying Bitcoin here in August 2020. And their stock price has reacted accordingly. So people are saying that it could be moving in a power curve. But let's just look, firstly, how it moves as an exponential. A few different ways. First of all, I did the longest term. I also did this one, exponential on, I'm just trying to find decent R squared. So this one is a little bit better, 68% R squared. Starting from, once it's sort of solidified in 2003, January 2003, till today. That trend is 13.7%, okay, per year. And now let's assume still exponential, but let's look at what's happened since August 2020 when they started buying Bitcoin. Whoops, sorry. Okay, it's this. Now I'm not just, the bands look better if I know it looks a little bit weird, but if I make it evolving and sort of change how the trend is growing at the moment from 2020, this is how it looks, and then we just project it out on the trend that it will be. So it's way faster trend here, and that trend itself is growing at 80% per year. It's monster trend line. Let's take the 10th and the 90th percentile, see how it looks. Okay, so again, this is only from 2020, but this is what's happening. And you can see that when we go into exponential, it's softens out a little bit actually from where we even have been going in the last few months. We've been going even faster. A lot of numbers, a lot of way to do this. Now let's look at the same chart with strategy still looking at exponentials here. But let's say now from 2020, we want to grow this in power like Bitcoin, because it's possible that since most of their value from their balance sheet is from the Bitcoin that they hold, that the stock price itself might start to grow in power. My caveat here is that I think for some of the analysts like Giovanni and Sminston and some people, they've been looking at just here from this bottom to the top. I'm not doing that because I think they started in 2020 buying Bitcoin. This is what this bump was from. So I'm not trying to pin the dates on the best R squared or something, but let's just take a power trend. Okay, it looks very similar, by the way, to the exponential trend, but it's flatter. Let's take the 10th and the 90th. And this is where you go. So the R squared itself is pretty bad, right? 29% R squared. As opposed to an exponential, which stocks typically grow in exponential, always grow in exponential. This is a 49% square. It's still not great, but it's better. And I don't know, maybe it was a lot of build up for what I have, but I'm more in a wait and see with some of this stuff. I think everybody knows Bitcoin's going up. Everybody's kind of following the space. Bitcoin's going up. They hold a lot of Bitcoin, so their price is going to go up. I would just say at the moment they're somewhere probably realistically between exponential growth and power growth, but I'm not seeing, based on the general trends, anything that says like they're definitely moving in power at the moment. Yeah, I mean, very difficult to value stocks compared to Bitcoin. I genuinely believe that Bitcoin is so predictable. I know everybody's saying that the 4-year cycle is over. I'll remind people they said that in 2021 as well. It is high, no matter if you look at an exponential chart. You shoehorn an exponential trend on MicroStrategy from when they've bought Bitcoin, or a power trend. But I guess for everything I was hearing on Twitter that it was sort of definitely a power trend. I haven't seen it yet. It certainly could turn into one. Absolutely could turn into one. All right. Remind you, once we put the Bitcoin chart on, Good morning, Fred. Yeah, I'm pretty sure it's a power. It's in fact I know it is because I did it myself this morning. If you take out the 22 bear, uh, then it looks much better. Your R squared on the power is something like 78%. But this is where the markets are more art than science, right? Okay, this is exponential power. Exponential power. Power is a more sustainable curve, a gentler curve. Exponential is a constant curve. And I know everybody's seen this, but when you throw in Bitcoin, it just looks so predictable, for lack of a better word. The other thing, I asked ChatGPT. Thank you, Yahim. This is what I need to call it. Yes, maybe I'll save some listeners, save some algo headache. Yeah. Yeah, I agree with you. I mean, I hadn't done the analysis until today, honestly. So that's my understanding as well. And stocks are just not exponential. Sorry, they're not power. They're always exponential. The interesting thing, though, the thing to caution, and I know that MicroStrategy is way ahead of everybody else, but I asked ChatGPT about all their financings to buy Bitcoin. All right, I don't have a screen share actually for this one. And Gemini gave me an error, wouldn't even answer. Usually I share Gemini with my screen shares here, but I count 1, 2, 3, 4, 5, 6, 7, 8 listings of convertible senior notes primarily. And then this last one is secured term loan. From 650 million to a billion to $500 million, another billion, 800 million, 600 million, 800 million, 200 million. Most of the time, 600 to $1 billion in a raise. The interest rate can be very low, as it was, often quoted, 0.625%, 0.7%, paid semi-annually. But they had one, the $500,000 senior secured note was 6.125% per annum. But that's the risk that these strategies and all treasury companies will have is, in my opinion, is Bitcoin's going to grow at a sustainable, more gentle rate. You may at the beginning grow very, very fast, but you're going to have to battle this interest that you're going to have to pay with the valuation of Bitcoin in the future. And it might not be as gangbusters as you think. Thus, the safety in just buying Bitcoin, pure Bitcoin, and not buying a company that plays with ways to buy it. But again, Saylor's smarter than me, and there's no question that what he's done is incredibly smart to acquire a lot of Bitcoin. But the long and short is I want to just keep an eye on it. Sorry, Tim, did I? No, I don't have it. I'm just reading. I don't have a screen of those notes of the financings. I was just reading them. Anyway, point is, yeah, they have very cheap interest rates at the moment. he's acquired 600,000 Bitcoin. So you can't fault him for that. But this is going to be the same thing for all the treasury companies, is no matter how repeatable you think it might be, you're going to come up against exponential interest, compounding interest, versus only power growth of the asset. And those things don't match. They can never match. Yeah. As Fred says, the latest, and this one didn't even show up in ChatGPT, right? I remember hearing this. So that's 11% high dividends on the preferreds. Let me see if Gemini does it again. Oh, now it showed up. Maybe they heard me. The AI heard me. Again, I'm not showing GPT just because my screen share is, I didn't get everything set up there on that account, but whatever. Some very cheap. This senior facility was more expensive. They don't actually say, but GPT said it was 6%. Yeah, this one. Anyway, it's not a hobby horse for me. I don't really care much, but I was expecting more from this while I myself started to chart it out, and it's not that exciting. Their stock price is probably going to be somewhere between these two for a while. And yeah, it's trading high. I mean, it's trading over the 90th percent, or sorry, it's not now at the 90th percentile. It's on the exponential. It's between the 70th and the 80th. Certainly can go back up above the 90th in another, in an extension of this bull, no question. There you go. Liquor, ladies, and leverage. The Bitcoin lover that he was, Munger. So we'll follow it. I'll keep updating it, but it's not in power yet. It's very weak. It's more exponential, but a very weak correlation. If we assume that it is power, it's trading at the higher end of the band compared to if we assume it's an exponential, which is, 70th, 80th percentile price. This remains my best chart of the day. These are where the economists that almost everybody watching this show was learning from. Everybody. They thought they could scientifically just spit out 6.7% per year in the money supply, and all would be good. I really want to emphasize that point. It's a lot of, I think about that all the time. Like even the things I'm telling you guys, the things that, when I was learning finance during the real estate bubble of the early 2000s, right? A lot of talk about structuring securities and structuring real estate deals, and that ended up scaring me from that stuff and pushing me more to hard assets. Once the 2008 crisis happened, I was pretty young out of college. But anybody that was reading any economics textbooks, they were all written during this time period, 80s, 90s, 2000s. Like anybody who's anybody, a talking head, Ray Dalio, all these people, they're thinking that sort of normal, just for whatever reason, is back to the 70s and the 80s. But nothing will. It's a problem. It's the one problem with conservatives, even though I'm fine with talking about conservative values and stuff, but you're never going to go back to the good old days. Things are always going to change. We have to adapt. I think Bitcoin's a great way to do that. Yeah, precisely. Ninja, no income, no job, no asset. It was cheaper to buy a house than to rent a house in the U.S. The mortgage payments were cheaper than the rent, and with renting, you had to put a 1 month security deposit. You didn't have to do anything in buying. Thanks, Fred. Yeah. It's faster and faster growth. Except this chart doesn't really prove it. And more is proven out with this one, with the stocks. Faster and faster growth is required for portfolios as we move to each monetary epoch. But this one is interesting too, in that the Fed is kind of at the current trend, is this at the current levels, is that the original World War I, World War II trend line slices right through where we are today. It's kind of interesting. 7.6% CAGR. So everybody, when Paul Samuelson was writing that the Soviet Union was going to overtake the United States and communism was the greatest thing ever, that was actually a historically low growth rate for the Fed's balance sheet than where we are now, back to historical norms. So you better be getting at least 9%. That's what the Federal Reserve gets. And more like 11.5% without reinvesting dividends. That's what the S&P gets. Strategy is working pretty well. All right, at the moment, this is a 80% growth rate, this trend line. I'll just prove it to you, right? So $209 is 2025. Let's go to September 2026. September 1, 335. Oh, 60. Sorry. Gotta check that. This 60%. Let me do that again. September 1st, 2025. 209. September 21st. September 1st, 2026. 335, yeah. 60%. This is a 60% growth rate that they're best fitting exponential trend I can find for MicroStrategy from 2020. I need to actually put it on the button so I don't have to do calculations on the fly, but that's what it is. %60 is better than what Bitcoin's doing. Bitcoin is running at 45%, 42, getting closer to 42 actually at the moment. So I can see why MicroStrategy is exciting for people. But there is risk. Yeah, Yahim. I mean, that's the thing. Like, there's no way. There's no way that this doesn't turn around very soon. And everybody knows it's coming. Everybody knows. You can already see it slightly bottoming out, right? A little bit less of a decrease every month. A little bit. And once that happens, I mean, gasoline on the fire. Bitcoin's a great buy. Never financial advice. Fair value. Depending on how you measure it, MicroStrategy's a little bit elevated at the moment. A little bit elevated. Exponential, similar level as Bitcoin, but the trend itself is way lower. It's closer to the 50th percentile, whereas the price is closer to the 70th, between the 70th and the 80th percentile. And even higher if you assume it will turn into a power curve, which I'm not sure it will. But I really am thinking about this a lot because I think the more and more Bitcoin companies hold, the more and more risky it's going to be to take compounding exponential loans, compounding loans with compounding interest, where you have to pay more and more every year based on the Bitcoin that you hold. You know, again, MicroStrategy is number one in the pack. They're way ahead of everybody else. If a liquidation occurs, I'm not saying it's going to be MicroStrategy first. It could be any one of these companies that you can find on bitcointreasuries.net at the moment. Hi, Adam. Yes, no, definitely. I'm not saying don't hold strategy or, you know, I've profited from it myself. What about, yeah, yeah, for sure. Smaller ones selling is the biggest risk to that. And I think the wider ecosystem triggering everybody knows it was DeFi that was the last bubble popping. Could be Bitcoin treasury companies, this one. MicroStrategy will be the last one to go. If they do go, it would be epic. I mean, it would be an epic blow up, but of course, I'm not saying that that's going to be the case. We got some time. I think 10 to 15 years before Bitcoin is a truly world reserve asset with low volatility and almost ubiquitous unit of account status i.e. Bitcoin Standard. But until it gets there, you still have huge markets with huge liquidity, i.e. the Treasury market, which is here. The United States federal debt is literally treasuries. This is just a massive market. Yeah. Fred says world changes at $1 million Bitcoin. That's somewhere here. Early 2030s on the trend. I don't know the answer to that, Tim, but could be. Hi, Nadia. Yes. And it will be sooner, I'm sure. So this is always fun, right? Look at the, let's take off the, look at the 90th and the 80th and the 70th. So I am 100% confident that Bitcoin will hit these again at some point, okay? Unlike a lot of people who are saying now that the cycles are over and we're going to have steady growth. I just don't think markets work that way. I think we're going to extend. So if you imagine that, this just like we had in 2021, 2017, obviously the green extends way over the black. We can see when we hit a million sooner. And actually, you got to get well above the 90th to do it. So still 2030 for the 90th percentile. But I'll pull up the top 10 percentiles. That's the crazier chart. Just give me a second. Is it sarcasm, Dominic? Or do you mean in this cycle? I am 100% confident Bitcoin gets to $1 million. The only question would be if we're denominating things in dollars or sats at that point, but I think we'll still be in dollars. So here's the exciting chart. All right, we're moving from this chart, which is all the way up to 100. And now this chart, which is between these two. Only the 90th through the 100th. All right, I'm going to put on this chart now. There's only the 90th through the 100th. Always fun to look at the projections. The 100th is not going to happen again. I'm actually pretty confident of that because this was very volatile figures. The 100th only occurred like here in 2011 and here in 2013. So I'm actually going to take the 100th off. It's not happening again, no matter what the hyper Bitcoiners say. I'll be happy if it does, but it's not happening. So that leaves the 99th to the 90th. And if you see as I pull it out here, we're already at 1 million in the 99th by 2027. But this would be extremely rare. This would be a 1 percentile event, 1% event. The 98th will get to 1 million by 2028. The 97th by late 2028. 96th by 2029. 95th. This is now you got to start thinking of what's more realistic, what's more practical. And I think somewhere here, I think 2030. If we consider the 4-year cycles, then that would portend 2029. And yeah, 2029. because I do think hitting the 95th is realistic. Let's take the lines off only to the 95th. Okay, it's hard to see, I know, with my yellows, but there's a 90. Let's take off even the 96. Only the 95th. Can't really see it, but there's a yellow line there. Let's take this off. We hit it quite easily in 2021, very easily in 2017, and of course very easily in these times, in the early days. So again, if we just do that, we assume 95th as our max, assume the 4-year cycles, then we would do it in 2029. So there you go. $2029, Tim. I think 2029. I don't think so, Dominic. I really don't. Go back to this chart. Federal debt. No, not this one. Sorry. Where's my extension? Yeah, here we go. Remember, we're growing the U.S. federal debt at a slower rate than we were post-Nixon shock, 1971 until 2008. We're growing slower, only 7.2% per year on the federal debt. No matter all the press and all the stuff, the actual numbers say we're growing at a 98% R squared, 7.2% growth rate. So if it's slower than what it was in the prior cycle, I think you could extend it longer. Again, I'm not saying everything's fine. I'm not saying the world is not going to be on fire, but yeah, good call. Steven is fantastic. Money or debt? Oh, I see what you mean. Yeah, Dominic. Sorry. Yes, sir. Maylocks moments. Which one? This one, the debt, or the percentiles? Top 90? Top 10? Sorry. 90 and above? Yes, sir. Where are you working, Nadia? If you're working, you're getting paid. It's a good thing. Even a few percentage points of that paycheck. Yeah, I haven't gotten the latest buzz or the dot plots and all that stuff, but I don't know, Fred, or if anybody's heard. I honestly haven't read about it as far as hawks versus doves on the rates, but I would assume they would keep the rates unchanged. But they always surprise. Not always, sometimes surprise. So maybe we trigger our silly season early with a Fed cut. Yeah, I think so too. A lot of things usually happen in the fall when people come back. This remains my favorite as far as where we're going. Not only because it's such a nice looking curve and, kind of, again, predictable. I'm using a statistical term. Not that I'm saying I know where it's going to be, but, we have yet to falsify any of these bands. if you falsify one, then you can take it off the list, right? But I think even this one can be, yeah, you can put on here. I know it's hard to see the orange, but the top band is 2.6. Sorry, can't read it myself. The top band is 2.8x, 2.8x the trend at the time. So 2.8x, there's your number. Americans, I know, like to get to one number. So if the trend is at the end of the year, 125K, 2.8x is 350K. This sort of remains my favorite way to judge the silly season. And if we do have a bull or a, you know, extended euphoria, then already is the euphoria that exists right now in the Bitcoin markets. Although I know there's a lot of people that still think this is the top. But if we do, and, you know, say this number becomes falsified, this top band, then we just take it off and reevaluate as the next cycle comes. But so far this has not been removed. It's a good question. Never financial advice, right? I've always said I've played these pretty terribly. I've been in the markets a long time, and the crypto markets, so to speak. And you can go on my feed and see, I'll show you this chart. Like, this was a screaming sell in 2017, and I even posted it. And the fact that I didn't, like, take more chips off the table in 2017, you know, you always have a little bit more regret that you can't stack more later. But personally, for me, it's more about the possibility to stack more in the future. So yeah, if it gets to these levels, I probably will take off some. But it gets hard, right? Like, I am by no means saying that I do these streams just to help myself as much as hopefully helps other people. But let me show you. All right, so this one, remember, this is the old PSR. This is the market cap divided by mining revenue. It forms nice tops, very nice tops. All right, so, and I remember posting this in December 2016 on Twitter, December 2017, sorry, that this was, you know, way outside the range and all-time highs, all the rest. It wasn't as beautiful as a chart as this, but I still posted it. And, you know, would have been a perfect top signal. Of course, when you're in the moment, you don't know, because, like, look at this. This looks like it could have been a topping, then this, and then it went even higher. So you never know. Like, I remember this February 2018 bounce, which was here. No, it's here, actually. And you're already way off the highs of this metric. But you bounce, and you're like, well, maybe it's coming back, but it wasn't. So it's a long way of saying I don't play them great, but, you know, taking a few chips off the table for lifestyle, or if you think that you can hold it for another couple years and buy Bitcoin when there is the inevitable puking, you know, I think it's a decent strategy. No exit for sure. I'm not selling my, you know, entire stack. Good question. You could sell and buy gold Although again, gold looks pretty extended on all the charts. Or you could just sell and hold, or sell and put into fixed income in dollars or euros. Euros don't have income, so I guess dollars. But like I said, I've been through these cycles many times, guys, so it's not easy. And each time I regretted not having more powder to buy here when these lows repeat. So, by the way, if you just look at this chart, we have way longer to go. This is the 98th percentile and the 2nd percentile. Okay, so just basic extremes here. Let's put it on a log. It's actually better. So we got plenty of room to go on this chart. I understand. Yeah, we need to talk about Kelly Criterion, Fred. I know that Steven is big into that. I haven't fully delved into that myself, but from what I've heard from Steven, whenever he explains it, it seems pretty interesting. That's true. That's true, Nadia. Anybody have strategy options or just ETFs? Another thing I saw, people saying, "Oh, this time's going to be different because we have so much more institutional appetite from the ETFs, which started here, right? Start of 2024, we had this boost in price, and the PSR boosted as well. But we had CME futures started precisely here in December 2017. I know that the volume and the liquidity was way lower. You were only doing $1 billion days in Bitcoin trading here versus now we're at $100 billion days on spot, only spot. So I know that it's a different epoch. I know that, CME futures could have forced this down faster than, say, this went down, which took a little bit longer. But I guess I just like to look at the numbers. I mean, if these charts are still holding as extremes and Bitcoin bounces around based on the 4-year cycle, it's sort of like if it's not broken, why try to fix it? I'm not saying sell now. I'm saying if you get back to these levels. And again, never financial advice. It says go 75%. Wow. Did not know that. Well, there you go. It's quite interesting to hear. Options are great. I'm going to just putting this up on the screen, this money or debt tweet. I know people just search for money or debt, Kelly, and you'll see some interesting stuff there. Cool. Can you plot it over time, Fred? Could I make a chart of it? Like of that 75%, can I get an active? If it's a simple enough formula, I presume I could plot it over time, the Bitcoin allocation, because that would be interesting. I would definitely build that chart. Yeah. So I need to. Nice. This is a good one, though, because, again, what this shows is market cap extended over what the miners actually make. And to remind you, it's a huge multiple, right? So it's 100. You can't look at PSRs like PEs. PEs are after expenses, so you can translate across industries. You can't do that with a PSR. It's the blockchain industry alone you could look at. But so we're at 157x. That means the market cap of Bitcoin at the moment is 157 times the value that miners make in new coins and fees in dollar terms rolled over the trailing 12 months. Okay, that's how you get this nice multiple. It's extended. It's been over the trend since 2000, since the ETFs. ETFs were here basically, right? Sorry, Mike. But if this thing shoots up to the outer bound, then I think it's caution. I will, for sure. Thanks. Good idea. Very good idea. This is, it's an academic number. Like, of course, I don't know what the full mining industry is making, but just so people are clear, if you haven't seen this, like, here's the same multiple, same bands. But look here on the, so now we have market cap instead of price. We have market cap and the revenue. All right, so I'll put it on log scale so you can see how, obviously you can just see how smaller miner revenue is as a function of the market cap. So the market cap is 2.3 trillion, 2,360 million. 2,360,000 market cap. And miners only make 15 billion, 15,000 million on a trailing 12-month basis. If I were to take off the market cap, this is how that curve looks. It's very small. So it's not much money, really. And what's even weirder is you see the halving, how much it has affected it this cycle. It's growing again, but we're not even at all-time high, which is bullish. To me, that's very bullish. This is how it looks. This is miner revenue. It's just an academic calculation. You take all the coins over the last year that they earn from new issuance, from the block reward, and then also the fees. Calculate a dollar price at the time so you can get an annual rolled figure, and that's what it looks like. It's never been more than $17 billion. And right now it's 15 billion, 14.8 billion. So bullish, in my opinion. This is very bullish. Even though this ratio is getting pretty hot, right? It's getting towards the higher end. I should do this in actually the 10. I'll update this chart for you. I need this in the 10 percentile bands like I have for you know, for Bitcoin, every 10th percentile. The rainbow. But we have plenty of room to run on this chart. Plenty of room. Anybody else? Other charts you want to look at, or you want to look back at something? I probably need like a summary dashboard with all these charts to show you where we are with percentiles. Percentiles are great. It shows you exactly where we are, right? So here, not even close to the 90th. Bullish, or at least in my opinion, not bearish, since we're in an uptrend. Here, to show you exactly where it is, it's between the $107,000 power trend. $108,000 power trend is between the 60th and the 70th percentile, so 65%. So literally, it's right about that. That's the 1 sigma number. That's not exactly, actually. 2/3 of the time, the Bitcoin price has been below where we are today. But things really get silly above 90%. So we have a long way to go. As far as projection, how far am I taking this out? This is as far as I got on this one, unfortunately. 1.1 million. But if you want, you can see it all on my website. I have a table out. So go to charts, the chart, which is still the only one up on this site. And it's more basic than what you see here. You have the power curve. And I have this table going out to 2036. I should probably do another one. And this is why power growth is different than exponential growth. Okay, so it's the one number that's fixed is this one. It's the last one on this table. Increase in time to double. It's very different than exponential growth. Exponential growth, that percentage is fixed. Doubling time is the same. 7% growth rate is will double in 10 years, compounded. Here, the doubling time, it takes longer to double each time. It's proportional with itself. So when Bitcoin was very small, 12.7% of the time would double in only 64 days. Now we're in this epoch here. I always get confused. Actually, here. We're here, roughly. So we're doubling every 626 days, but that's still 12.7% of the time. That's how Bitcoin is growing. This is good. I'm afraid to ask anymore. Let me pull it up, Fred. This StreamYard, I can't actually copy and paste it. Send me a link. Can you send me a link on Twitter, message? And I'll put it up on the screen. You talking about Kelly? Hold on. Oh, sorry. I got it. It's just what you did last. Okay. I, 'cause 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 Okay. Obviously, I'd like to do daily to see the variations, but increasing over time. Very interesting. Anyway, it's all on my site if you want to see the general tranches, the general epochs. And this is the best. This is also the best thing about the power curve is you look at this table and this last column, you'll see how good the power curve has been since 2016. Yeah, 2016 here. So this last column will tell you if you stopped calculating, you only looked at the data from, until that year. So 2009 till 2016, 2009 to 2017, 2009 to 2018, and you just calculate the curve forward. You just do the math. This is what the price shows today. All right, so this is all time, obviously. This is the last row, but all the way back to 2016, the numbers are pretty close to today's price. I mean, remarkably close, unbelievably close, way better than stock to flow close. So this is what I mean when I say Bitcoin power curve hasn't changed since 2016. It's all here on my site. Unfortunately, we're not on the 2010 curve, $5.5 billion per Bitcoin, or the 2011 curve. We have fallen from those curves. But 2016, 17, 18, all the way till today are pretty good. Notice how 2014 is even higher than 2013 because it's taking in a lot of that crazy spike at the end of 2013. And then even with the lower prices in 2014, you get a higher price today. Maybe even surprisingly high, but that's the math. So Bitcoin was kind of working itself out here, but from 2016, remarkably good. That's also why I'm less intrigued with like looking at something like MicroStrategy and power. I just think it's, it might be that it turns into a power curve, but it's kind of way early to see. And also, I mean, just basic stock picking, obviously. I mean, don't sell your winners early. There's no reason to sell now. Again, never financial advice, but you can use trailing stops or whatever. But it's not as exciting as Bitcoin from a fundamental point of view, in my view. Although, like I said, this is a 60% curve, the best fitting expo curve into the future, exponential, from 2020 when they started to buy. Completely agree with this. So the question is only going to be how deep is that cascade, right? We know that the weak treasury companies will get liquidated, have to sell Bitcoin to cover the debt, exponentially rising debt with high interest rates. MicroStrategy would be the last to go, but could happen. Very unlikely, I admit, but could happen. Slopes are here, slope of the Bitcoin curve. So again, another reason why Bitcoin is different than stocks is it's sustainable. It's slightly declining, each year, significantly declining at the beginning, but this is the trailing 12-month rate of the trend itself. So you'd be, if you were buying here under $10, the trend was moving at 950% per year, down, 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 until today. We're going to finish out this year at 42%. Last year we finished at 45%. 2026, 39, 36. Of course, as everybody knows, it's not a smooth ride. I have trouble buying into the idea. I don't know what you guys think, but I have trouble buying into the idea that we just stay on this curve, or we have this sustainable growth now. The 4-year cycles are over. I have trouble seeing the proof of that. But we're just going to see. Going to have to wait till the end of the year. Gold isn't going to help you. Silver isn't going to help you. Peter Schiff hates these growth rates. The best it's been doing is 4.4% per year, CAGR, since 2008. I would beg to differ, but sure. Waiting, Fred, with bated breath. Sure. Although we know that the president of the country has shit coins, but I understand the point. Three points of why it's going to be softer this cycle, okay? Having not as relevant, regulated, so less SBF examples. The third, advisors are taking a long time, but they are coming. I saw a tweet from Natalie Brunell. She was in New York, and it's anecdotal, but Wall Street was saying how Bitcoin's the nothing burger, not going to be important, uses too much energy. And then she pointed out how that's different than AI, and they backed down from that point. But I know a lot of Wall Street people have no clue about Bitcoin, and most of them are sad that they didn't take my advice of 1 Bitcoin per family member back in the mid 2010s. But they still don't, they're not like buying, they're not thinking about it. They're doing their day-to-day business. I don't buy it. Should I take that stand? I don't buy it. Here's another thing about the halving. The halving is relevant. Look at how much it affected miner revenue. All right, so this is I should do a chart to show you the different frequencies. This is a trailing 12-month, a very smooth number, okay? Very smooth. But in the 2021 bull, we got up to $17 billion worth of coins coming out of the network. Now, it even got chopped off. This is the halving right here. It got chopped off from the last halving, and the market hasn't really recovered. This is this dip from last year. Now it's back up. But, by my take, the halving really affected the trajectory of miner revenue. So, again, that's going to... in my opinion, that's another reason why prices could go bananas, and then miner revenue gets this another crazy peak. Yeah, so that's a good, so that goes back to my thesis about the power curve, how relative it is to Bitcoin. Let's look at debt again. All right, this is the bit down. So the interest rate is important, super important, but let's just look at the growth of treasuries itself. Again, it's here. Okay, so we're at a slower trajectory now in national debt growth than even from 1971. All right. But Bitcoin started all during this period. Okay, so Bitcoin was going as this trend line, which hasn't really, like, it's a 98% R squared. It's a pretty good trend. So as the treasury market, which is the vast majority of where the wealth is in government securities, right? It's the United States dollar, the United States treasury market. It grows at 7.2% per year. I've said this 98% R squared to me is 98% of the, or 96% R squared. Sorry. It's 96% of the reason why Bitcoin itself grows. It's just a self-fulfilling prophecy. It's network adoption, growth, buyers and sellers. Grandma hears about it during Thanksgiving each 4 years, and it gets exciting. But then grandma forgets about it for the next 3 years, and people go back to their daily lives. This is 95% of the reason why Bitcoin grows is the adoption itself, the network itself. Like even Facebook, I don't have Facebook. I need to get them up on there. They're still a stock, so they grow exponentially, but it is a network itself. It's a huge network, right? 3 billion people use their products. But that took them 20 years to get there at strong exponential growth for the stock price. I mean, Bitcoin is also going to take a long time. It has faster growth, 45% per year at the moment, 42. Even though I like talking about the money supply and exponential curves, I think 95% of the pricing action is you're looking at it right here. It's just the nature of Bitcoin. You know, Bitcoin was cutting its teeth again, just to reiterate it, right here during this entire period. Bitcoin was born right here in the financial crisis, as everybody famously knows. And whether the debt was a little bit high, a little bit low, spiking up again, didn't change the power curve. The biggest question, hi Slanik, thank you. The biggest question to me is whether we go like smoother. Back to Fred's 3 points from Matt Haugen. Is that how you say it? And, you know, I guess everybody can have their thesis, but yes, we have the ETFs. Yes, we have the regulation. I think there are decent counterpoints to every three of those points, to each of those 3 points, as you mentioned, but probably the biggest is just the madness of crowds, you know, in the context of this curve. And like I said, these have never failed. These 5, 6 actually. It's very hard to see, but we hit it. So 2.8x the trend. That is max target end of the year for me. Never financial advice. 350K. And what would people say, by the way? What would all these people who are right now saying that we're, volatility is lowering, institutions are here to stay, what would they say when we actually go 4x in December 2025? Just because, people get silly. I mean, we saw what happened with the meme stocks. If it happens with meme stocks, I'm sure it can happen with Bitcoin. So what are they going to say at the end of 2025 when this chart is completely vindicated again, because it's just simple math, relatively simple math, and then that's your cycle. I don't buy it. I don't buy the mainstream hype. Do you think the one thing that has not changed, or the one thing that has changed, is they have not yet market weight adopted Bitcoin? You mean to say the one thing that has not changed, right? I presume. Yeah. Yeah. I got to hand it to Giovanni for sticking with it. I mean, I did two things in 2018. I did the monetary base exhibit, and I did the power curve. The power curve, I was always saying it was moving in power curve, but I wasn't as following it as much until probably I started my channel 2022, maybe. So that was when I was doing more charts on the power curve. Wasn't like posting it on Twitter as much, but Giovanni, myself, we posted charts on the power curve of network adoption for Bitcoin here. I did it right here at the end of 2018. He did it in like September of 2018 on Reddit. And in March, we had the stock to flow bandwagon start under the sound money hyper Bitcoiner purist sound money stock to flow crew, which sort of distracted everybody for 5 years. But this curve was quietly continuing all that time. And I just think it's funny. People have short memories when you make a prognostication. And I'm telling you, I heard a lot of people say that 2021 was the last cycle. Like there wasn't going to be a cycle even in 2021 as it was happening. Like this top here was here to stay, especially with that double top. Confused a lot of people, myself included. So I'm hearing a lot of the same things now that I heard in 2021. And I would just say, don't fix what's not broken. Yeah, that's true, Tim. Well, it was a power curve. He was drawing a power curve, but he was using exponential coefficients. He was using gold and silver, which are exponential assets, into his power curve coefficients, which is power. So it didn't make any sense. It was ham-fisted and projected out wrong. Yeah, Fred probably has more opinions than I do here. I don't follow ETH, to be honest, anymore. I had more thinking that it could be something big, years ago, but stablecoins are a use case. It's obvious the government wants stablecoins to spur treasury demand, but they also want it according to their rules and everything else. And into the Black Lagoon. I guess I need to get some more ETH charts up just to see, but I'm not a. Yeah, for sure. It will help Bitcoin, stablecoins, that is, as has happened in every prior cycle. There's always a narrative of why the price is rising too fast and then falling too fast in Bitcoin. And again, why would that be any different this time? Because there's a few ETFs of Bitcoin. But yeah, I can't really answer your question anymore. I haven't analyzed it too much, and stablecoins are not a killer app. They're important for miners. They're sort of a way to hedge cheaper, faster than buying, some registered CME future against Bitcoin. You can pay people easier. When I say easier, I don't mean like Lightning isn't awesome and all that stuff. That is. I just mean that, even people in Argentina and Venezuela, they still understand dollars at the moment better. I remember during the Iranian conflict, summer conflict or whatever, a month ago, Peter Todd was interacting with some people who were saying how much easier and more demanded stablecoins were than even Bitcoin for people in Iran. And I understand that. I mean, I'm not saying it's good. I'm not saying I agree with it. I'm not saying I would love for Bitcoin to be, the preeminent unit of account, but it's going to take time. Scientifically, I don't know the answer to that, but probably a little bit. It's always been the claim that, specifically back in the old days, Tether was pumping up Bitfinex's balance sheet and then buying Bitcoin and thus increasing the price. Yeah, but that's only from the perspective of shorting. I mean, they got to be willing to short it rather than ride the longs, which, if you were I understand like volatility is a risk and, you got to hedge yourself, but even from like a selfish perspective, I've never been on Wall Street, Fred, you tell me, but wouldn't people want to sort of ride that wave if they think it's going to happen again when they let it happen rather than short it out of existence? Yeah, we got a long time. Let me pull up the top 5 broad. I need to actually extend this to 8 because I have it, but or 7. One second. So again, just skate where the puck is going. Broad money, top 5 today is 115 trillion. Add on at least another 30 trillion for the rest of the world. That's 130 trillion, 150 trillion, just say 150 trillion, whatever. Bitcoin is 2.3 trillion. So, and again, skate where the puck is going. These are not going to go to zero tomorrow. They are going to continue to increase. We can be sure of that. So, even if Bitcoin is rising, the others are also rising. And yes, they rise at a slower rate, but they're still rising. Yeah. And again, that could happen. Like, I would be very happy if this becomes vindicated and it even goes higher, right? If we go back to say this, who's to say we can't have a pop like this in this cycle? And then you're going back up to, let's say, the 99th. Okay, 100th did not happen in 2017, but the 99th. Let's pull that out to the end of the year. So then you're at 600,000 just right there, based on the numbers. But as Fred said, if $1 trillion from here decides to move into Bitcoin, then it's no problem getting to 1 million. M3, not M2. I can't emphasize that enough. M2 is just a money supply that has retail type investments, but M2 does not include institutional money. And the Federal Reserve has not published M3 since 2006. So you got to create it again. They still publish almost all the data that we can recreate it. So I've done that here. 36 trillion. It's like 15 trillion higher than M2. So it's, just because information is easily available online does not mean that that's the best information. Oh, don't bring it up, Fred. Don't bring it up. I'll turn away any MAGA listeners while I berate Putin. Clearly a dictator, clearly the richest person in the world. No, don't be sorry. I wonder if people have finally gotten around to the fact that he's actually a dictator and he's actually the most evil, rich person in the world. Like, he's at a czar level of wealth. He controls a standing army. Very different than a democratic. Xi is there too, by the way. Xi is there. But Putin is more evil and has done it longer. Totally possible. Totally possible. And I think you're right. It is a pump. It is a way of driving adoption, taking TradFi money to BTC. Completely agree. Question will be if stocks if they start to hold Bitcoin, will they start to move in this gently sloping, sustainable power type curve, or will they continue to move in straight line exponential curves? That's my ultimate question that I don't have an answer for yet. I'm just tracking. Yep. Way richer than Elon Musk. In a completely different ballpark. His people are literally subjects. They have no private property. They have no free courts. He can throw them out of a window or give them radioactive tea or sushi anytime he wants. And he has. It's just people that think he is somehow like a democratically elected leader or someone who's good for his people, you have no understanding of Russia or what it is. Sorry, Fred. I can't start. I can't start again on this. Too many people will switch off anyway. That's an interesting quote from the Bitcoin hater. Yeah. You could take that quote either way, but right? I mean, you could still take it that they're going to let it ride if Bitcoin does go parabolic this cycle. But I guess that quote is more aligned with Bitcoin is going to be more TradFi, traditional. This time is different. I don't want to be a broken record, but another reason why I'm pretty confident to say that it's not going to be different is, a lot of people don't even understand what a power curve is, let alone that Bitcoin's going to grow in a sustainable power curve. So that's my thinking there. We're 15 years into a new asset which is growing differently than any other asset ever does. And we have hype cycles, basically. It's always easier to buy than sell, right? So again, never financial advice, but if you think about where we come back down to, it's also helpful. All right, so here we were when you could get Bitcoin for a couple $100, it's way cheap. A couple $1,000, way cheap. And then the Peter Zion story, hilarious. When he said it was $17,000 overvalued when it was trading around 16,000. But I would also view this as pretty indicative and pretty advisable of where the price could go at some point after a puke. So, end of 2026, 50, 60,000, 70,000. What does it mean, Slanik? Good question. Well, I make charts every day and try to track trends. It's not really technical analysis. It's more overall big picture. Takeaway is Bitcoin, as usual. But the Bitcoin has a pretty sustainable pattern that we can track and perhaps profit from. Another general theme that I try to say, oh shoot, I just cut that off. But another general theme I try to say is when people tell you that this time is different or the sky is falling. Sometimes they're right, as in here. But most of the time, it just follows a trend. The Federal Reserve is under trend right now, which tells me that eventually they're going to come back to the trend. And if they print more money, that's, again, more reason to buy Bitcoin, but it's not the only reason. The main reason is this is a very sustainable curve. It's very different than an exponential curve. That's a less sustainable curve in the markets. Oh, interesting. I've seen a Twitter handle that also does it. I wonder if that's the same one. Checking. It's MicroStrategist.com. Bitcoin Power Law. It's pretty interesting. And let me see if I can find. I'm pulling it up. Here we go. I presume you're talking about this. This is pretty good. This is pretty interesting. So let's find. Strategy is here. Obviously, the longest one. So this is a log scale. All right. Power laws become evident when you go log. They become a straight line. Doesn't matter the base. This is base 10. This is base 10. Doesn't matter. It will always be a straight line. This is quite aggressive research. It's quite interesting, but yeah, I mean, this should scare actually every treasury company because so it's BTC yield percent per day, right, which is higher than the Bitcoin price roughly. And as you can see, they all approach a 0% yield or close to 1. Of course, this is still pretty high. This is a daily yield. So that's important to understand. But you're not going to escape this trend. Look at this trend. And it is a power trend, which is quite interesting. All treasury companies are eventually going to go back to 1 or 0% yield. It means just 1-to-1 market cap to their Bitcoin holdings. Strategy is the furthest along this path. They all will go on this path. It's a pretty interesting chart. I don't know, sir. I will. I was actually just saying, I think I should do it just to show people the differences, but I'm not tracking ETH too much. Hello, Satoshi. It does sound wild, doesn't it? But that's precisely the, it's precisely what the curves have pointed to before. Basically, either very close to this 1 or very close to the 2. And you can see we just hit the 2 here in 2019. Pierced it, the 2 in 2023. And as everybody says, it's usually the top of the prior cycle, right? So 20,000 in 2017. You get to that somewhere here. Actually got lower than 20K in 2022. I wouldn't completely discount that from happening again. But this should give you the most conviction is on the downside. On the upside, it's silly season. Everybody's thinking, Maylocks moments. Do I want to sell? Do I want to not? Do I want to take shifts off the table? Maybe this is going to double. It's my only chance to hold Bitcoin. Then I will lose. It's very difficult. Never financial advice. I'm not saying I play these things well. But, I think more Maylocks moments at the top than the bottom. But we're right on trend. I will check it. This is, though, very indicative. This is great research. Metaplanet is here. This is very interesting. I'll have to replicate this so I can get it interactive, but you're not escaping this trend for sure. And what is the MicroStrategy MNAV multiple? It's 1.7 or something at the moment. So on a daily, he's saying that it's a little, whatever this is actually on log scale, it's 0.3% or something, I don't know, per day. So they're the most mature, but this is just hype, basically. And they're all going to follow this. There's no way they're not going to follow this. Hello, Mario. Yep. I agree with this. The underlying is much safer. And the other thing, yes, he did. He's got a good newsletter coming out. It's a good post. He's a good dude. But the other thing, Mario, that I think is important, and I talked about it a little bit at the top of this stream, is, this yield, which is the valuation of the stock versus the Bitcoin return. Again, it's growing in power. It's just sustainable. Just think sustainable when you hear power. Interest rates are growing in exponential. They're compounding. So again, even if you have very, very cheap interest rates, as strategy does, you can extend this a long time. Strategy is obviously, they're professionals. They know what they're doing. They have way lower leverage than some of these companies. But those two curves, they cannot work together, the power curve and the exponential curve. So I'll just show you what I mean here. It doesn't matter the interest rate. If you have a 0.1% interest rate, a 5% interest rate, if it's an annuity, even if it's simple interest, it'd be very, very slow compounding. But you can, for anything that has an interest rate, you can convert it into a compound annual growth, and that will grow very fast. Now, Bitcoin is also growing very fast at the moment, so it's good, but they will slow down. Bitcoin will slow down relative to the growth rates of these other interest rate facilities. So you just have to be prepared for that. Obviously, MicroStrategy has a completely separate business. They have cash flow. Although I don't even know how good their cash flow is doing. So here's, again, the way that I look at it is you have the Bitcoin market, which is a power curve growing thing. It's a gently sloping concave down figure on log scale. And this is going to break this chart. But if I did log bottom, just to show you, I can never get this right still. So here's log bottom. My axis is screwed up, but just imagine it becomes a straight line. So on log, this is messed up, but on log, Bitcoin becomes a straight line. Okay, you get very predictable. You know, this is that chart you just can't unsee. It's unbelievably good. Okay, but well, let's even put exponential back. Here's exponential on log. Anyway, I got to reset it now because of my colors. So Bitcoin grows in power, log linear scale. Here is the US Treasury market. Grows to 7.3% CAGR. Okay. Bitcoin will overtake it, but it's going to take some time. And the question that I would have for Bitcoin treasury companies is, what is going to be the cost of that interest over time versus your Bitcoin holdings? You know, for now, at least if we stay on a consistently growing pattern, everything looks fine. But I'm kind of looking at this as something like a singularity, right? It's like once Bitcoin, and I don't know exactly when it will be. This is actually 50-50. Right, you have treasuries are worth 100 trillion, Bitcoin's worth 100 trillion in the early 2040s. So I don't know how it's going to play out, but these two curves can't continue. If Bitcoin is such a thing that people demand to hold, the market will either have to turn power or Bitcoin will have to turn exponential. So it's going to be very interesting to see how this all plays out. Yeah. Be good to try to model this out. I don't know. It's complicated with actual interest rates and even with publicly traded financials. This is pretty deep research. This is pretty good. However this guy's doing it. It's pretty cool. I mean, going into treasuries, yeah. Yeah, that's true. That's true. And I do expect that to happen. So it's a Trojan horse. You know, for as all the marketing that the $100 trillion moniker occurred, and most people were thinking of broad money, which again, Bitcoin is way smaller than broad money. Broad money is $150 trillion, where Bitcoin's not close. But again, skate to where the puck goes. We might actually pass a lot of these major assets at 100 trillion. It's just, you got to wait 10, 15 more years. All right, guys. As America is waking up, I usually turn, you know, close up shop, at least publicly. Still got some other work to do, but yeah, don't panic. These curves are very helpful. They should give you, you know, they should give you confidence. This is definitely coming back to trend. 100% it's coming back to trend. Good night, Tim. So have confidence in that. You better be getting at least 9.3% per year. That's what the Fed gets. Stocks, reinvesting your dividends. Where's stocks? I think I closed it. Stocks give you 11% per year. Gold is not a great. Peter Schiff hates this chart. Gold is only shown that's going to give you 4.4%. Even with these high prices well over trend, gold is not a great hedge in the modern fiat world. And you can go to my website for the more detailed power curve statistics. So, shameless plug as always. Want to give this stuff out for free? Keep doing it. You can donate to my BTC research, BTC Pay here for the research. Thanks everybody for tuning in. Appreciate it. Happy Wednesday.